you may want to get onto the housing ladder in 2024. In this video, we're going to be covering the basics, the different options of actually getting onto the housing ladder, and the costs involved. The economy in the UK over the last few years has been pretty volatile and uncertain. We've seen modern high levels of inflation and modern high levels of interest rates. Inflation, now around 4%, actually got up to 10+% over the last couple of years, and interest rates were then steadily raised by the Bank of England to combat that high level of inflation. And of course, interest rates, the higher they are, have a direct impact on your mortgage repayments and will also impact your ability to get on to the housing ladder. Although demand for house buying has dropped as a result of the high levels of interest rates, house prices have remained pretty steady and stable. This is also whilst rent, I know I've experienced this myself, has been steadily increasing over time as landlords try to pass on these inflationary cost increases to renters, which means more people want to get onto the housing ladder. Now we've set the scene of the current UK economy and housing market, let's actually talk about the basics to getting yourself on the housing ladder, which is a mortgage and a deposit. For the majority of people out there, when they're looking to buy a house, they have an element of the house value in cash as a deposit, and then the rest of the money they need, they'll take a mortgage out from a bank. When you're looking for a mortgage, it's likely going to be worthwhile to speak to an independent mortgage broker or advisor. They'll have an access to a range of various offers, and you can try and find the one that's the best suit for you. And with a deposit, to be honest with you, for most people, it's just one of those things where it's hard work. You need to try and cut back and save as much money as you can to build up to whatever level of deposit you need. Of course, it goes without saying, the smaller or the cheaper house you buy, the lower value it will likely have. So of course, the lower deposit you'll need to build up to, and therefore the lower mortgage you'll also likely need. If you're trying to buy as big as house possible and stretch your income and your budget as far as you can, then you'll likely need a higher level of deposit and a higher mortgage, which can make it a bit more challenging to actually get on to the housing ladder. A deposit is just the cash that you will save over time. If you're fortunate enough, you may be able to get some help from family or friends, but it's that cash, and that's essentially your almost initial investment that you put into the house to secure it. In my opinion, when you're actually saving for a deposit, the best vehicle to do that in is a lifetime ISA. With a lifetime ISA, specifically a cash lifetime ISA, you can put away £4,000 every tax year and get £1,000 on top of that from the government of completely free money. You can then also earn an interest rate on top of that cash as well. So you can almost get a 30% risk-free return by using a cash lifetime ISA in the process of building up your deposit. I'll leave a link in the description with a bit more detail, and I've talked about ISAs on this channel many times already before, but generally speaking, for most people, if you're looking to save up for a house deposit, a cash lifetime ISA will be the best way to go. Then let's come on to the mortgage. Any money you don't have in cash as a deposit will then be borrowed from the bank in the form of a mortgage. With a mortgage, as you're probably already aware, you borrow that money from the bank and then you pay it back over time, both the actual capital that you borrowed and of course, you pay an interest on top of that, and that's essentially how the bank makes their money through mortgages. In the early years of your mortgage, you actually are paying a lot of interest, but then of course, over the term of the mortgage, 10, 20, 30 plus years, you then also pay down the capital over time, the initial money that you borrowed from the bank. That's the basics out of the way of getting onto the housing ladder. A deposit and a mortgage is what you need to essentially get onto the ladder. But what are the various options you can use to actually get onto the housing ladder? I am going to run through 4 different options with you now on how you can do that. Number 1, if you are a first-time buyer, which I am myself, then luckily we can actually put a lower deposit into the house and still get onto the housing ladder. You can get a deposit as low as 5%. I would say, generally speaking, if you're able to save up for a 10% deposit, that likely is preferable, just because then your mortgage interest repayments will be lower, and you also have less chance to go into negative equity if there was a house market crash and the prices did fall. So I'd say 10% is slightly better, but if you can only save up 5% for the deposit, you can still get onto the housing ladder. This is of course only available to first-time buyers. Generally speaking, if you're not a first-time buyer, you will need a slightly larger deposit. With this first option, you're a first-time buyer, you save up 5 to 10% using preferably a lifetime ISA, and that is what can get you onto the housing ladder. It's worth saying, and a lot of people watching probably have a help to buy ISA. Unfortunately, Help to Buy ISAs are now closed. They closed a number of years ago. So if you have heard of a Help to Buy ISA, but you haven't got one, you can't actually open one anymore because the scheme's closed. If you do have a Help to Buy ISA though, I would strongly recommend looking into a lifetime ISA instead. In my opinion, for most people, it's going to be the better type of ISA just because we can get more free money from the government with a lifetime ISA compared to a Help to Buy ISA. Also worth saying, you may have heard of the Help to Buy equity loan, which was another scheme the government put in place to help people get onto the housing ladder. That also is no longer available. Just wanted to make those two quick points just because you may have heard of those buzzwords, but yeah, if you haven't already got them or using them, then they're no longer available. So don't concern yourself with those two options, the Help to Buy ISA and the Help to Buy equity loan. The second option I'm going to cover on how to get onto the housing ladder in 2024 is by using shared ownership. This is essentially where you part buy, part rent a house. It provides a more accessible way to actually get a start on the housing ladder. As the title suggests with shared ownership, you purchase a portion of the property, usually around 35 to 75%, depending on how large a deposit you have and how much the seller is selling. It essentially means, whilst you don't have 100% of the property and own it outright, you own a share of the property, and that then requires a both smaller deposit and a smaller mortgage, so your mortgage repayments would be less. For most people that I've heard and that I've spoken to that have used this scheme, the idea then is over time to try and own more and more of that property until you own it 100%. So shared ownership is usually used by first-time buyers, but it can actually be used by anyone. This is where a company like Latimer can come in to help you out. They are the company behind a number of developments across the country, and these developments do offer a higher proportion of affordable housing through this share ownership scheme that I was just explaining. Latimer performed some market research, and the results were a lot of people thought they would actually struggle to ever save up the deposit required to get on the housing ladder, and people didn't know about or misunderstood the shared ownership scheme, which is where they come in to not only break down some of the shared ownership myths, but also help people get onto the housing ladder through the product that they offer. There's a lot of very useful tips and guides and more information about them on their website, but they are part of Clarion Housing Group, which is the UK's largest provider of affordable housing. They've been building properties and houses for people for 100 years, and this shared ownership product is where they're helping people get onto the housing ladder. I'll leave the link to their website in the description if you want to get a bit more information on Latimer. I would particularly shout out their very detailed and handy guide on actually shared ownership and getting on the housing ladder. It's definitely worth a read. If you have 15 minutes, you can get it from their website. I'll also link that in the description below. Thank you very much to Latimer for sponsoring this video on getting onto the housing ladder in 2024. The third option of how you can get onto the housing ladder is cash. Don't get me wrong, if you're younger like myself, buying in cash probably seems very, very impossible. This is probably more one for either people who are fortunate enough to have help from friends and family, or for maybe older people who have cash through inheritance or through pensions that they're now accessing. But you may not be aware that buying in cash is actually something you can do. In fact, it can actually make the home buying process a little bit easier, because if the seller knows you've got cash and are going to get the cash, it cuts out a lot of the sort of middle paperwork that you need to actually get a mortgage, get assessed for a mortgage, make sure you can borrow that amount, and so on. It's also worth saying here, when getting onto the housing ladder, we can get a gifted deposit. This essentially is where you would get cash from a friend or family, for example, your parents. They can essentially give you a gifted deposit of cash, and that can be put towards the deposit or towards buying the house, if you're buying the whole house in cash. This can be a good way for parents or grandparents to give their children money, but in a gifted way, to then put it towards the purchase of a house. And a gifted deposit, even though I'm talking about it in this option number 3, can also be used for option number 1 or 2. However you're looking to get onto the housing ladder, it could be worth asking friends or family if a gifted deposit, even for a small amount, is able to go towards you, because that can obviously help you then get onto the housing ladder. Often that first step, that first deposit, is the hardest hurdle to come across. So of course, every little helps if you're in a fortunate enough position where you can get that help. Option number 4 is then combining these previous 3 options together. You actually could combine them all. You could use a 5% deposit with a lifetime ISA on a shared ownership scheme, and get a gifted deposit for part of that 5% deposit, and that can then go towards your first property.
Knowledge.
So you almost can get a little bit more creative with the different ways to get onto the housing ladder and combine some of these options and methods we've talked about to essentially ultimately get you, your partner, or whoever onto the housing ladder in 2024. We've gone through the 4 options that came to mind when I was scripting this video. If you have got any other options you've heard about or use yourself, please leave them in the description below. It'd be good to have a discussion about them. But now I wanted to briefly touch on the cost involved with actually buying a house. Many people think buying a house is literally getting a 10% deposit and that's it, job done. Unfortunately, it's not that simple. There are some other costs involved. Of course, more cost isn't ideal for us trying to get onto the housing ladder, but it's very important you understand and know the costs you're going to be paying. You don't want to go through the home buying process and then realize you hadn't factored in certain costs and then come up short. The largest cost, of course, will be the deposit, the upfront money to actually get the house. The second largest cost, if you're not a first-time buyer, will be stamp duty. This essentially is a tax you pay on buying a house. There are stamp duty calculators online you can use to work out, depending on the value of the property, how much stamp duty you may be liable to pay. If you're a first time buyer, you haven't got to worry about stamp duty. 3 are mortgage fees. Assuming you use an independent mortgage advisor who generally has a better range of access to options on the market, it's probably the better route to go down. You will pay them a fee for their service. You'll then likely pay a mortgage arrangement fee to actually get the mortgage set up. There may also be other fees involved with that process from the side of the bank or the mortgage advisor. I think it's just clear, whatever route you're going down, understand the fees you're going to pay when it comes to the mortgage. Number 4, estate agents. Assuming you use an estate agent, you then may have a fee or commission that you need to pay to them. Once again, just whatever estate agent you're using, just understand and know what their fee will be so you can factor this into your total costs. Number 5, legal fees. You will need a solicitor when you're buying a house, and of course this will come with a fee for the lawyer. Once again, fees can range. I would say on something like a solicitor you need, speak to family, speak to friends, who have they used in the past, how much did it cost them. You want someone that's going to have your obviously best interests and not charge you a fortune. Number 6, I think, and this is a surveyor's fee. Essentially, to go into the property, look at it and understand if there's going to be any issues with the property. A good one usually costs around £500, but these can be worth their weight in gold just because they're going to survey the house and see if there's any big issues with it. It's much better knowing before you move in that there's something wrong and you're going to have to pay £3,000 to fix it rather than moving in and finding it out down the road. In some extreme cases, you may find out things that are so wrong with the house and that it's going to cost so much to repair that you may not even interest you in buying that specific house anymore. They were the main fees that came to mind and thought are worth mentioning. There are of course going to be other fees involved, such as removal fees for moving your stuff from your current house to your new house. There'll then be ongoing repairs and maintenance you may need to do to the house. There'll be insurance you may need on the house, council tax to pay on the house. Listing all of these fees isn't really to scare you, it's more just so you understand exactly how much money you need for the actual home buying process, and then once you've moved into the home, the sort of ongoing fees that are going to be incurred. It's much better to know that straight up at the start, and even if you can write them all down and estimate them, than there being some nasty surprises down the road. And that wraps up this video on how to get onto the housing ladder in 2024. If you are planning yourself on getting on the housing ladder, please leave a comment below and let me know how your process is going, what your plans are. If you're already on the housing ladder and have some tips or other tricks that I've missed through this video, please once again leave them in the comments. It'd be good to get some discussion going. Thank you very much for watching this video, and I'll see you in the next one.